breaking this morning. First Republic.
Oh, yeah, we got more bank failures before I forget. First Republic Bank is the second largest bank failure in U.S. history. Let's fucking go.
Bank has become the second largest bank failure in U.S. history. Regulators have seized the bank, sold off most of its assets to JPMorgan Chase in a rescue deal as America's banking crisis flares up again. In a statement this morning, JPMorgan Chase's CEO Jamie Dimon says our government invited us and others to step up, and we did. He did note this will benefit JPMorgan Chase. We'll talk a lot more about it. But look, First Republic is now the third major bank to fail.
Yeah, no, totally. They hate consolidating and purchasing competitive banks with like at pennies on the dollar. They hate it. Jamie Dimon's like, oh man, I got my money up big today. And people think I did it out of the kindness of my fucking heart. It's so sick.
Since March, the announcement comes just hours before markets open, and we're keeping a close eye on Wall Street to see how it reacts when the markets open. Our business and politics correspondent Vanessa Yurkevich outside of a First Republic Bank.
I used to make a joke back in the day about how to deliver socialism in America by allowing Amazon to monopolize every sector of existence and then forcibly overtaking Amazon, like with the government at gunpoint and nationalizing it. And I feel like we could do that with banks too. Like just nationalize fucking Jamie Dimon. Like they're buying out everybody anyway. Let's do it.
Bank here in New York City. Vanessa, good morning to you. What is so shocking is that 11 weeks ago, Jamie Dimon and JPMorgan led the way for all these big banks to inject $30 billion into First Republic.
I love the idea that the government would for sure run these banks into the ground, as we're looking at a story about a private bank that was literally bailed out by the government. Like, the notion that the government would certainly run these banks into the ground is just something that something that you say in general is something that all Americans say because it's like something that they've heard over and over again. So they say it, right? So they repeat it. But it's pretty funny to repeat it right now. Okay? It's like the one time where if you have that opinion, you should just keep it to yourself. Because objectively, the private ownership is not working, and it is currently running into the ground, and the government is saving these banks. It's very odd. It's like defending cryptocurrency all the time, but then definitely doing it like while we're watching the FTX collapse happen or something. You know what I mean? Like, oh, dude, I love crypto exchanges. You better not be talking shit about my favorite crypto exchange, FTX. That is the most valid and reasonable one, while like Sam Bankman-Fried is going to jail. You know what I mean?
To try to save it. And even that didn't work.
That's right, Poppy. And later this morning, when this First Republic branch behind me and 83 others around the country open, it will be under new ownership. JPMorgan Chase buying First Republic Bank in a deal overnight, announced this morning by the FDIC. This was an effort by regulators to shore up consumer confidence in the banking system. As part of this deal, JPMorgan Chase will assume all deposits of First Republic Bank. So when people go to the bank this morning, their deposits are safe. This all started to unfold several weeks ago after the failure of SVB and Signature Bank. But as you mentioned, there was that big cash infusion of $30 billion led by JP Morgan. But things really started to spiral last week after the first quarter earnings call by First Republic, where they revealed that deposits fell by 40%, totaling about $100 billion. That sent stock prices falling. Just on Friday, shares were trading at about $3, down from about $122 earlier in March. We do have a statement from the Treasury Department out early this morning reacting to the news. I will read that to you. Here's what they said. Quote, Treasury is encouraged that this institution was resolved with the least cost to the Deposit Insurance Fund and in a manner that protected all depositors. The banking system remains sound and resilient, and Americans should feel confident in the safety of their deposits and the ability of the banking system to fulfill its essential function of providing credit to businesses and families. So clearly, this is an effort by the FDIC, an effort by JPMorgan Chase, and an effort by the Treasury Department to assure customers and consumers that the banking system here in the United States is, in fact, safe. Poppy?
It's still just stunning to see 3 big U.S. bank failures since March. Vanessa, thank you. We'll check back in with you throughout the morning. And Caitlin and Christine, I mean, the truth is the FDIC still is going to pay $13 billion here in terms of the cost of this.
Well, that's what they've forecast, actually, because we don't know what the ultimate cost will be, but they've said it could be about $13 billion.
And Christina Romans, you're obviously our chief business correspondent. What do we know about the details of how all of this happened and what it looks like, what they've agreed to?
It was just an amazing weekend. I got to tell you, I mean, this is JPMorgan taking over the assets and the deposits of this bank. And then there's going to be a loss sharing provision with the FDIC for anything that comes up that could be problematic on the bank's books. So a little bit of a sweetener from the FDIC to make sure that JPMorgan would come to the table. We know there was an auction of this bank. So over the weekend, you had all these banks who were vying for pieces of First Republic, but it was pretty clear.
Maybe PNC, JPMorgan, others.
By the end of last week, it became pretty clear that the FDIC was going to have to step in and take over this bank. It was not going to be able to stand alone.
Yeah, and I think if you're waking up this morning and you're looking at this, I was just texting with a top House Republican who deals with all of this, and he says essentially this is unfinished work from SVB weekend, from what happened with Signature Valley Bank.
Well, so
Silicon Valley.
It's funny because, like, it's another big corp of fucking up. It's another big corp of fuck up. And then our solution, because we're American, is not the government coming in and just being like, okay, you're done with this. You can't play with this toy anymore. You keep fucking this up. It's that you're like, oh, okay, we'll just subsidize the larger corporation to now buy you at, like, super cheap prices. That's fine. It's perfect. It's like literally... That's our best solution, actually. No better solution could exist in the circumstance, so don't suggest it, you fucking asshole.
Valley Bank.
Yeah, so let's talk about what happened there, because you had this bank, First Republic, lost 41% of its deposits. $100 billion walked out of the door after SVB and Signature Bank failed. Because what happened was that showed that these banks, like First Republic, they have a lot of uninsured deposits. People didn't want to be sitting there with all of their money in a bank, more than $250,000 in a bank with uninsured deposits. And so they walked out the front door and took their money to other banks. First Republic catered to wealthy clients on the coasts. It was known for like its $5 million jumbo mortgages.
Yeah.
So when you talk about Republicans in the House, look, nobody's crying over First Republic Bank, but you don't want chaos and turmoil to spread to the rest of the banking system as well here.
And do we think that there's going to be more chaos in the rest of the banking system as a result of this?
So I've been talking to a lot of people over the weekend, and they think you call this unfinished business. They think that what happened with the all that money that was the lifeline that went 6 weeks ago that went into this
the 30.
bank.
No, it's not. You want to know why? Partially because, like, the confidence that people have with the system not failing, especially as it pertains to banks that are too big to fail, is very real. And partially because, like, the first time Silicon Valley Bank happened, everyone freaked the fuck out. Then a bunch of other banks also collapsed, which they have in the past as well. It happens all the time. The FDIC steps in, but, like, never, big banks like First Republic. But we're already, like, we're over it. You know what I mean? I think people are just completely aware. People are just like, oh, yeah, this is happening. Fine. You know what I mean? What are you going to do about it? You have no say. You have no say in the process. You have no power. You're powerless. You just hope that the government doesn't fuck you. Like, that's it. That's what we got. That's all we got, as a matter of fact.
$8 billion.
Right. That bought it some time.
Yeah.
It calmed down market fears. It bought it some time and allowed the industry to be able to find a way to manage this problem. Will there be more banks? No one knows for sure. I mean, 3 big bank failures in just a couple of months is really remarkable. But for the most part, most banks are perfectly healthy and will be able to manage this interest rate risk.
But can we talk about the FDIC report here? Because I'm obsessed with this. This is an aspect of this, talking about the root causes of here and what went down. The FDIC report basically said that because they have so many staffing shortages, that led to a part of what we've been seeing playing out with these banks.
Yeah, that Fed report on the collapse of SVB was really interesting, in part because the Fed is both the regulator and the supervisor, and basically said there were all these open red flags at Silicon Valley Bank that were not followed up on, and that management didn't understand what was going on, but also just poor bank management and oversight was not as robust as it should have been.
When I sat down
That's crazy. It's not even a question to fucking improve oversight in the banking sector. That's not even a talking point, okay? Not only that, but we can't even fucking collect taxes properly. Like, people who are powerless to fight back against big government, the Republicans will stop the government from, like, you know, getting their tax dollars back. It's crazy.
Down with JPMorgan CEO Jamie Dimon just last month. I asked him about these string of bank failures. Would there be more? Here's what he said then.
This is not 2008.
Yeah, he got done licking his lips and going, oh man, that surely would be so bad. Please. Num, 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 num. That would be so bad if we bought a bunch of fucking banks that the federal government basically gave us for pennies on the dollar.
Okay, this is much more limited. There are only a handful of banks that had this particular problem. They'll eventually be resolved one way or another, and I think then people should take a deep breath. In a week or two, a lot of these banks can be reporting earnings. I think they'll probably be pretty good.
What we subsequently learned as we bring in Roger Altman, former Deputy Secretary of the Treasury and founder and senior chairman of Evercore. Roger, thank you. What we learned when those bank earnings came in is how much money fled from First Republic in the first quarter. But it's notable because Jamie Dimon, who's now leading the bank that is buying up most of their assets, is the one who led the initial attempt to rescue. He's the one who picked up the phone, called the other bankers, said, let's get in here, let's try to rescue First Republic. I wonder why it didn't work.
I think it didn't work because the deposits kept leaving First Republic. What basically happened here is that after the failure of Silicon Valley Bank a few weeks ago, a lot of depositors just simply decided that they didn't want their money at medium-sized banks, and they moved that money either to the very largest banks like JPMorgan or Bank of America, or to money market funds. And
I'll tell you what I think happened. I don't think he's talking about people that have $5,000 in their bank account. There are a lot of people in the United States of America, because there's a lot of wealth here, that have more than $250,000 in their bank accounts. It comes as a shock to you when I say that, because you're like, what? I have minus $35 because I just got hit with an overdraft fee. What the fuck do you mean? No, I think a lot of people have, and a lot of companies have, way more than $250,000 in their bank accounts. And they realized, oh, fuck, unless we are with one of the largest banks that are too big to fucking fail, okay, we need to pull this shit out of here right now. Those special loans that we were getting, those special privileges that we were getting from First Republic Bank is no longer, especially with the interest rates being the way that they are, okay, those special rates that we are getting from First Republic Bank are not so special anymore, especially if it's technically not FDIC protected. Now, these big banks don't have FDIC protection over $250,000 as well, obviously. They don't. However, that doesn't really matter because, which, by the way, I do think that they should offer some level of, like, insurance over it. But the reality is that there's a lot more people than you would think that have this kind of money in their fucking bank accounts or something close to it that basically moved into too big to fail banks. That's what happened. Does that make sense? I don't, like, when they're covering the story, I feel like they cover it as though, like, you know, the plumber decided to fucking move his, like, $1,000 savings or $5,000 savings or the college fund that they have for their children away from First Republic, and it really fucking tanked their bottom line. Like, no, I think it was a lot of rich people that consolidate all their wealth in one fucking account, whether it's because they're lazy and stupid, like some people that stream on Twitch, not me, of course, or because they get favorable deals from the banks when they have a lot of money at these banks. And $250,000 or more, like $1 million in a bank account, doesn't do much for you if you're with Chase or if you're with Bank of America. But $1 million in a bank account does a lot for you if you're with First Republic, right? And First Republic is a big bank still, but they're not like a systemically important, like too big to fail bank, right? So BOFA can get away with like being like, oh, you had $1 million in a bank account? Sick, whatever. Who gives a fuck? Talk to me when you have 10 million. That's when you can get a concierge service for yourself. However, First Republic probably offers that, careful and very personal relationship to middle America, or not middle America, but like upper middle class individuals who are business owners, for example, favorable loans and the like. When you do that, which probably creates a massive level of clientele that is over $250,000 in the bank, that will move away at the first sight of fear and the first sight of uncertainty, which makes sense. Someone asked in the chat, what's BOFA? It's Bank of America and nothing else. Please stop saying it's something else. It's just Bank of America. Duh.
First Republic in recent weeks lost almost all of its deposits. And what happens is they had to replace those deposits with a higher cost loans from the Federal Home Loan Bank Board and from the Fed. And that,
by the way, everything I just mentioned was pure speculation. Well, except for the favorable clientele stuff for First Republic Bank, like being able to get more bang for your buck from a smaller bank than you would with Bank of America, or the Bank of America like private concierge clientele hands-on service only being afforded to you after $10 million. That part is real, but the speculation part is, I speculate places like First Republic have a lot of clientele like that, unless they're like a specialty bank like SVB, right? Which also had a lot of clientele like that, where the important clients for that bank moved a lot of their money. The part where you get better rates on bigger mortgages is also real. That part is real.
Crush their earnings, that crush their share price, and it snowballed downhill.
If you're waking up this morning and you have your deposits at First Republic, if you have a mortgage through First Republic, if you pay your small business payroll through First Republic, what do you need to know?
Do you know because you're one of the ones that pulled their money? Yeah, totally. Uh-huh. Yeah, definitely. Everything you know about me, honestly, with everything you know about me, do you think I would be with a specialty bank? Or do you think I have the exact same bank account since I was 18 years old? Which one do you think is the answer? It's not because I'm fucking brilliant or anything. I'm an idiot. But this is just pure laziness for me. I don't even have a fucking credit card, dog. I don't even have a credit card.
No, you're fine?
You're fine.
You're fine.
You're fine. In fact, all depositors in the United States today are fine.
Apparently, up to any ceiling, because...
Well, the new policy essentially, essentially is, first, all deposits up to $250,000 are and have for a long time been guaranteed by the FDIC. Second, if your bank is threatened, it becomes shaky, the federal authorities in recent weeks have made clear that they will protect all deposits regardless of size. So, effectively, if your bank is sound...
By the way, I told you this when the SVB shit happened, and people were yelling at me about this too. Of course they have to do this. Are you fucking crazy? That's the entire reason why the FDIC exists in the first place. It doesn't matter if it's more than $250,000. The $250,000 cap is a product of a older time anyway. Like, if adjusted to today's like wealth in America, with inflation on top of that, it probably is more than a couple million. That higher limit. But it doesn't matter. It's unlimited. The reason why it's unlimited is because if it's limited, then it defeats the purpose. The entire purpose of the FDIC's existence is so that there's confidence that you can like literally put your money in a fucking bank and know that it's not going to go away. You know what I mean? Before 2008, the cap was 125K. I mean, even then, it's like that was low for then. 250K is technically low for now. It doesn't matter. None of it matters ultimately because of the principle that I'm describing to you. The entire purpose for why they have the FDIC to begin with is so that people don't lose confidence in putting their money in a bank. What the bank does with that money, well, that part is really fucked up. Okay? They should regulate that part. But as far as the reason for why the FDIC exists, that is a perfectly valid reason.
Your deposits are fine because the bank is sound. If your bank somehow becomes shaky,
right,
your deposits are fine because the federal authorities will protect them.
Two of the things we've learned that helped lead to this failure of First Republic, 2/3 of their deposits were uninsured. That a lot of wealthy clients, business owners, You know, but if you talk about
I didn't even know this. There you go. What did I tell you? I didn't even know this. I said it was pure speculation. I'm wrong. It wasn't. Apparently, it's not speculation. It's pre-watch. Boom. There you go. Yeah. 100%. 2/3 of their fucking deposits were uninsured. There you go. That means 2/3 of the clientele was over the $250,000 limit. 2/3. The irony, of course, is that most okay, I'll just describe it like this. Okay, here, it's paint time. In the United States of America, you have the 1%. Okay? It's these guys. Their wealth is like, if there's an entire pool of wealth in America, the 1%, these guys, their wealth is like all of this, okay? Like, they pretty much own all of this shit. That part is not interesting. So let's erase that. Okay? Wait, hold on. Fuck. What am I doing? Go back to the brush. God damn it. Go back to the brush. Okay. Okay? Let's talk about the other side. Let's talk about the other side. The rest of it, when we're talking about like the real world, you have the upper middle class and like the wealthy and the upper middle class that don't make it up to like the 100 millionaire status. Okay? Most of the people, like if we're to cut that again, most of the people fall here, right? Not working poor, or sorry. Most of the wealth still is in that second category. Most of the wealth is still in the upper middle class, the working poor, right? And then you have like 80% of the public that's here that owns much smaller of a sliver of the overall wealth. These guys in the bottom, okay, the bottom 80%, let's say, or like let's say bottom 70%, okay? These guys in the bottom 70%. And the billionaires at the tippy top that are that own like a much larger percentage of this entire wealth pool in general, they bank with Bank of America and Chase. It's these guys, the small business owners, the wheelers and dealers that don't make like $100 million a year or anything like that, but they range anywhere from like having $250,000 in the bank account all the way to like $10 million or $20 million in the bank account. Let's say $10 million just for the sake of this argument. Okay? Those guys are the ones that are going to First Regional. Those guys are the ones that are going to SVB because they get, just like Andrew Tate gets like to be corrupt in Romania, they get the ball on a budget with banks like First Republic Bank. Okay? You know how Andrew Tate went to Romania because he was like, I don't have enough money to fucking be corrupt in America or in the Western world, but I can behave like a fucking oil baron in Romania? It's the same shit. The small business Andes are the ones that fucking float the boat of like the First Republic banks of the world. Okay? These are the guys who are like avoiding the fee, the FDIC protections because they're like, yeah, First Republic Bank, I never even think about it. It's an afterthought for me. I'm sure they'll protect my money until they can't, until you feel like you can't. They make up 2/3 of the First Republic Bank's clientele. They are the ones who probably immediately took their money out and moved it to the big banks, which is why there was a bank run. Or I could have just shown you the actual distribution of wealth in America.
An economist asked more than 5,000 Americans how they thought wealth was distributed in the United States. This is what they said they thought it was. Dividing the country into 5 rough groups of the top, bottom, and middle 3 20% groups, they asked people how they thought the wealth in this country was divided. Then he asked them what they thought was the ideal distribution. And 92%, that's at least 9 out of 10 of them, said it should be more like this. In other words, more equitable than they think it is. Now that fact is telling, admittedly, the notion that most Americans know that the system is already skewed unfairly. But what's most interesting to me is the reality compared to our perception. The ideal is as far removed from our perception of reality as the actual distribution is from what we think exists in this country. So ignore the ideal for a moment.
The graph is going to be all red.
Here's what we think it is again. And here is the actual distribution.
Yep.
Shockingly skewed. Not only do the bottom 20% and the next 20%, the bottom 40% of Americans barely have any of the wealth, I mean, it's hard to even see them on the chart. But the top 1% has more of the country's wealth than 9 out of 10 Americans believe the entire top 20% should have. Mind-blowing. But let's look at it another way, because I find this chart...
And then there's the craziest part about this, graph, is that when you look at the top 1% of the 1%, they also own like the majority of this graph. Okay? It gets more insane. The more you fucking look at like the tippy top of the fucking wealth, the larger they own the fucking wealth. It's an unfathomable amount of wealth that they have. That's why we always fucking say like the difference between a millionaire who has like $1 million and a billionaire who has $1 billion is about $1 billion. You know what I mean? Like, just like the difference between someone who has $0 to their name and a millionaire is, you know, about $1 million. The difference between a billionaire and a millionaire is insane.
Chart kind of difficult to wrap my head around. Instead, let's reduce the 311 million Americans to just a representative 100 people. Make it simple. Here they are: teachers, coaches, firefighters, construction workers, engineers, doctors, lawyers, some investment bankers, a CEO, maybe a celebrity or two. Now let's line them up according to their wealth. Poorest people on the left, wealthiest on the right, just a steady row of folks based on their net worth. We'll color code them like we did before based on which 20% quintile they fall into. Now let's reduce the total wealth of the United States, which was roughly $54 trillion in 2009, to this symbolic pile of cash. And let's distribute it among our 100 Americans. Well, here's socialism, all the wealth of the country distributed equally. We all know that won't work. We need to encourage people to work and work hard to achieve that good old American dream and keep our country moving forward. So, here's that ideal we asked everyone about. Something like this curve. This isn't too bad. We've got some incentive.
I like that the ideal still has like omega wealthy people, by the way. Like, also, that's not socialism, but it doesn't matter. I mean, this person is doing a good job describing it. But like, even in the ideal, if you ask an American, the fact that they still believe that there is a fucking guy who could be like a feudal serf, it's awesome. Like, it says a lot about the American mentality. Why wouldn't the ideal just be like everyone has enough to live and you know, do whatever the fuck they want to? Why is it that even in a fucking ideal, like, I'm not saying it's an ideal distribution of wealth is not supposed to be a reasonable one. It's supposed to be an unreasonable one. Do you get it? And even then, these motherfuckers cannot even dare to dream, okay?
As the wealthiest folks are now about 10 to 20 times better off than the poorest Americans. But hey, even the poor folks aren't actually poor, since the poverty line has stayed almost entirely off the chart. We have a super healthy middle class with a smooth transition into wealth. And yes, Republicans and Democrats alike.
Yeah, 1 million seconds is 12 days. 1 billion seconds is 31 years. To give you a better understanding of the difference between a billion and a million, it's often better to basically change the dynamic from like money or pieces of rice or anything like that like you can visually comprehend to an entirely different metric. I think that's precisely why what's that famous video? The Tom Scott video is like really prescient and really important, where he basically describes it by showing you length. You know what I mean? Reckfield's video on it is really good too. It's visual, but it basically describes it as such.
Chose this curve. 9 out of 10 people, 92%, said this was a nice, ideal distribution of America's wealth. But let's move on. This is what people think America's wealth distribution actually looks like. Not as equitable, clearly, but for me, even this still looks pretty great. Yes, the poorest 20 to 30% are starting to suffer quite a lot compared to the ideal, and the middle class is certainly struggling more than they were, while the rich and wealthy are making roughly 100 times that of the poorest Americans and about 10 times that of the still healthy middle class. Sadly, this isn't even close to the reality. Here is the actual distribution of wealth in America. The poorest Americans don't even register. They're down to pocket change. And the middle class is barely distinguishable from the poor. In fact, even the rich between the top 10 and 20 percentile are worse off. Only the top 10% are better off. And how much better off? So much better off that the top 2 to 5% are actually off the chart at this scale.
I'm glad that he basically described it. Like this is what I was saying. It's like, even if you look at the top 1% of wealth, okay, what is it right now? The top 1% of wealth is like, what, $500,000 or more? Household net worth for the top 1%. Household net worth is not at best, though. Its average income is probably better. As an individual, you would need to earn an average of $400,000 per year in order to join the top 1% and have a household income of $570,000. If you look at the net worth, the top 1% household net worth in the United States starts at $11 million, right? So $11.1 million in 2019 is the net worth of the top 1%, which I, of course, comfortably do not fall inside of, but I'm not going to use that. That's why I'm using the actual top 1%, the way that you understand it, the annual income top 1%, right? The annual income of top 1% is $400,000. I am technically a part of this, right? As you guys all know. Having said that, however, if you break it down further, if you look at the actual top 1% of the 1%, they still manage to own the same scale distribution of wealth that is not dissimilar to the same scale distribution of wealth in the entire country.
And the top 1%, this guy, well, his stack of money stretches 10 times higher than we can show. Here's his stack of cash, restacked, all by itself. This is the top 1% we've been hearing so much about. So much green in his pockets that I have to give him a whole new column of his own because he won't fit on my chart. 1% of America has 40% of all the nation's wealth. The bottom 80%, 8 out of every 10 people, or 80 out of these 100, only has 7% between them. And this has only gotten worse in the last.
And I would say that the line basically is like around here somewhere. And that line is labor versus capital. At this point, it's almost all capital owners, okay? At this point, up to like the 70% line, it's almost all laborers. That's the difference. This is a country that benefits capital owners. This is a country that was designed for capital owners, by capital owners, to protect their interests. That is the difference. If you are a laborer, you are most likely going to fall on this side of the equation. Even with the random number of like the tiny minuscule number of people that don't own capital, but own their own business, or are like a one-man shop, or are like a high-paid laborer, like a doctor, or a athlete, or a Hollywood celebrity, because they are still, doing wage labor, and their surplus labor value is still being extracted from them. Even if you are in that regard, even if you're there, you are still a tiny percentage, and usually around here, you know what I mean? A tiny percentage of the overarching labor-owning class that owns the majority of the wealth in this country. Yeah, by the way, these are numbers. This is an old-ass video. This is numbers from a decade ago. The distribution of wealth is even worse now.
Last 20 to 30 years. While the richest 1% take home almost a quarter of the national income today, in 1976, they took home only 9%, meaning their share of income has nearly tripled in the last 30 years. The top 1% own half the country's stocks, bonds, and mutual funds.
The top 10% own 90% of the market, by the way. The top 10% of wealth in this country own 90% of the stock market. The top 1% own 50% of that. Think about that. That is direct capital ownership. That is finance capital. Finance capital and the financialization of every sector of the market in the United States of America has created a system where even back then, 10 fucking years ago, and it's gotten so much worse, 10 fucking years ago, the top 1% owned 50% of the stock market, the top 1% of wealth in this country. I'm not talking about the top 10%, which owns 90%. The top 10% of wealth in this country owns 90% of the stock market. Remember, the top 1% own 50%.
The bottom 50% of Americans own only 0.5% of these investments, which means they aren't investing. They're just scraping by. I'm sure many of these wealthy people have worked very hard for their money. But
what the fuck? Oh, U.S. wealth distribution for Q4 in 2022. These numbers have changed. In the fourth quarter of 2022, 68.2% of the total wealth in the United States was owned by the top 10% of earners. In comparison, the lowest 50% of earners only owned 3% of the total wealth. Numbers have changed. In 2021, nearly 10% of U.S. households had an annual income of under $15,000. With such a small percentage of people in the United States owning such a vast majority of the country's wealth, the gap between the rich and poor in America remains stark. If you had to choose, do you think taxing by net worth and unrealized gains would be better for income versus income from labor? Yes, of course. It would be an equitable and just system. That's why it would never happen. When you are a laborer and not a capital owner, you are basically taxed on your net worth because your net worth is your annual income or what remains of your annual income, which is nothing because everything is going to rent. Everything's going to survival. Everything's going so that you can go back to work in the morning. When you're a capital owner, however, your net worth is significantly more important. How will this end? Surely it can't go this way for the past 10 years. I mean, think about how it has gone this way for the fucking past however long.
do you really believe that the CEO is working 380 times harder than his average employee? Not his lowest paid employee, not the janitor, but the average earner in his company. The average worker needs to work more than a month to earn what the CEO makes in 1 hour. We certainly don't have to go all the way to socialism to find something that is fair for hardworking Americans. We don't even have to achieve what most of us consider might be ideal. All we need to do is wake up and realize that the reality in this country is not at all what we think it is.
It's crazy. How do you convince someone that that thinks that this isn't a problem? Bro, if you look at this graph, if you look at the situation and you don't think this is a problem, I don't know what to tell you. I don't know how you convince someone. They're like, they literally are personally like, no, my lord, I like it. I like the way that things are, my lord.
Paying a payroll, for example,
Thank you,
for a
Coffee
company of
Dave.
100 people. A week payroll, 2 weeks is going to top the FDIC insured amount of $250,000. But they had a lot of uninsured deposits, and they also had a loan-to-capital ratio that was way bigger than most, 111%, meaning they had more loaned out than they had deposits in the bank. Can you regulate against those things? What would prevent something like this?
Well, first of all, Poppy, there's
Or
nothing
should you?
wrong with having a lot of business deposits, which go beyond $250,000. If you're a bank, you want that.
Right.
So there's nothing inherently unhealthy about that. What really happened here, and also happened with Silicon Valley Bank, is that in the last year or so, as interest rates rose very quickly, with the Federal Reserve trying to fight inflation and being a little late to that game, they found themselves with a mismatch. They had taken deposits, invested them in longer-term assets.
Dynamic Jab 13, virtual meal, and trip 4269. Thank you for the 5 get this subs.
Like federal bonds and mortgages. And as interest rates rose, they started to lose money because the cost of ineffective their liabilities went up and the returns from their assets didn't. And they had a mismatch. In this case, it wasn't quite as bad as Silicon Valley Bank, but it was unhealthy, and that's what really brought them down.
Hey everyone, I'm the editor. Thanks for watching till the end. Hope you enjoyed the content. If you did, then please drop a like and subscribe. Why not leave a Kaya L in the comments down below so that I know that you reached this point of the video? If you'd like more content like this one, then check the video up here on top of my head, or literally in front of my face right here.